Did you hear some people think Bitcoin could replace the dollar?
Replace the dollar? With all this crypto hype, who knows what's next?
Well, Bitcoin's market cap surged to over $2 trillion in 2025, making it a significant player in the financial
But isn't
world.
Bitcoin still too volatile? Just last month, it dropped 30% in a week. How can it be a stable currency?
True, but volatility is common in emerging markets. Look at how quickly it recovered after previous dips. It's a sign of resilience.
Resilience? Or just a bubble waiting to burst? The dollar has stability backed by the government, unlike Bitcoin.
But many institutions are now adopting Bitcoin. Companies like Tesla and Square have invested heavily in it.
That might be true, but those companies are also diversifying their portfolios. They're not fully replacing traditional currency.
Some studies suggest that if Bitcoin continues to gain traction, it could eventually serve as a legitimate alternative for transactions.
But what about regulations? Governments are starting to crack down on cryptocurrencies. That could hinder its growth.
Regulation could also lend legitimacy to Bitcoin, making it safer for users and investors alike.
I see your point, but it feels like we're still in the Wild West of finance. Are we really ready to replace something as established as the dollar?
Perhaps not yet, but the trend is clear. More people are interested in decentralized finance, and that could change the landscape.
Change is one thing, but replacing the dollar is a whole different ballgame. It's not just about hype, it's about practical use.
And practical use is growing every day. As more merchants accept Bitcoin, its role in everyday transactions could expand.
I guess we'll see. It's an interesting time for finance, but I wouldn't bet my dollars on it just yet. I'm curious if watching this video changes either of our minds.
Before we even get into whether Bitcoin can replace the dollar, let's take a step back. What even is money? Most people don't think about it much. It's just there. You work, you get paid, you spend it. Simple, right? But if you dig a little deeper, money is actually kind of weird. It's not valuable on its own. You can't eat it. You can't build a house with it. And yet, it runs the world. At its core, money is a system, a way for people to exchange value. It does three main things. It's a medium of exchange, so you don't have to trade chickens for rent. A store of value, so you can save for the future without your wealth rotting away like, well, chickens. And a unit of account, so we can price things in a way that actually makes sense. But here's the thing, money isn't real in the way we think. A dollar bill only has value because we all believe it does. It's a shared illusion, backed by nothing but trust. It used to be different. For most of human history, money was tied to something physical, gold, silver, even giant stone wheels on a Pacific island. If you had it, it meant something. But today, the US dollar isn't backed by gold. It's backed by the government saying, trust us, it's worth something. And because we all go along with it, it works. Now, this is where Bitcoin comes in. It flips the script completely. No government, no central bank, no one deciding how much of it gets created. Instead, Bitcoin is coded into existence, mathematically scarce, decentralized, and totally independent from any single country. But can something like that really replace the dollar? Can a currency with no physical form and no central authority take over the most powerful financial system in the world? Well, that's where things get really interesting. So now that we know money is basically a trust system, let's talk about Bitcoin, because this is where things start to get messy. Bitcoin was created in 2009 by someone, or someones, going by the name Satoshi Nakamoto. And right from the start, it was different. No central bank, No government control, no physical form, just pure math. Instead of being printed, Bitcoin is mined, not with shovels, obviously, but with computers solving complex equations. And there's a hard limit: 21 million Bitcoins. Ever. No one can print more, no one can change the rules, and no one, not even a government, can just cancel a transaction. To Bitcoin believers, this is huge. In a world where central banks can pump out more money whenever they want, diluting the value of what you already have, Bitcoin is a currency that plays by strict, predictable rules. No inflation, no political manipulation, just mathematical certainty. But here's the problem: trust. Most people trust the US dollar because, well, they have to. They pay taxes in it, buy groceries with it, and get their paycheck in it. Bitcoin, on the other hand, is still in its trust-building phase. And trust, as we've seen, is what makes or breaks a currency. Some people see Bitcoin as the future of money, a system that removes the middleman and puts power back in the hands of the people. Others see it as a speculative bubble, built on hype and destined to collapse. So which one is it? A new financial era, or just another tech fad waiting to crash? So, Bitcoin sounds like the perfect currency, right? No government interference, no inflation, and a fixed supply that can't be manipulated. It's like the financial equivalent of a diet where you literally can't overeat because there's only so much food. But here's the thing: currencies don't just survive because they have good ideas. They survive because people use them. And that's where Bitcoin runs into some issues. First, volatility. The value of a currency has to be somewhat stable for people to trust it. The US dollar moves a few cents against other currencies on a daily basis. Bitcoin, it can swing thousands of dollars in a single day. Imagine running a business where you price a product at 0.002 Bitcoin in the morning. But by lunch, that same amount can either buy a Tesla or a used bicycle. That's not just inconvenient, it's a deal breaker for most businesses and consumers. Then there's adoption. A currency only works if enough people actually use it. And sure, some companies accept Bitcoin, but let's be real. How many times have you actually paid for something with crypto? Right now, it's mostly an investment asset, not something people buy groceries with. And even when people do use it, it's clunky. Long wallet addresses, irreversible transactions, and gas fees that sometimes cost more than the thing you're buying. That's not exactly a recipe for mass adoption. And here's another issue: scalability. The Bitcoin network can process about 7 transactions per second. For comparison, Visa handles thousands per second without breaking a sweat. Bitcoin's current setup just isn't built for millions of people using it every day. There are workarounds, like the Lightning Network, but for now, if everyone suddenly switched to Bitcoin, the system would clog up like a city with one stoplight. And finally, the elephant in the room: government resistance. Governments aren't exactly thrilled about a currency they can't control. The US dollar isn't just money, it's power. Governments use it to fund programs, impose sanctions, and control economic policy. If Bitcoin ever got close to replacing the dollar, do you really think governments would just sit back and let it happen? They don't even like people avoiding taxes, let alone opting out of the entire financial system. Now, to be fair, not every politician is anti-crypto. President Donald Trump, who in his first term called Bitcoin a scam, is now saying he's pro-Bitcoin. and even floated the idea of a Bitcoin reserve, which, let's be honest, is a bit of a turnaround from calling it fake money. But that just shows how much the conversation around crypto is shifting. The government isn't ignoring Bitcoin anymore. It's just trying to figure out how to deal with it. So, where does that leave us? Bitcoin is revolutionary, but it's also flawed. And for it to replace the dollar, it's going to need more than just a good concept. It needs stability, adoption, scalability, and a way to deal with governments that aren't about to give up control of the money supply without a fight. Until then, the dollar isn't going anywhere. So, the question is, why is the US dollar still the undisputed heavyweight champion of global finance? Well, it's not just because people like using dollars. It's because the US government has made sure there's really no other choice. Let's start with the most obvious one: taxes. The US government doesn't accept Bitcoin for your tax bill, and that's not by accident. If you live in the US, you have to pay your taxes in dollars. That means no matter how much you love Bitcoin, if you want to stay out of prison, you need a steady supply of dollars. And that, right there, creates constant demand. Even if people wanted to shift entirely to crypto, the government has built in a system that forces them back into the dollar economy. And it doesn't stop there. The US government also controls the dollar's global dominance. Right now, the dollar isn't just America's currency, it's the world's currency. Oil, priced in dollars. International trade, mostly settled in dollars. And if a country wants to borrow money, there's a good chance they're doing it in, you guessed it, dollars. The Federal Reserve and US Treasury make sure that demand for the dollar never fades. And when countries try to move away from it, well, let's just say that hasn't historically gone over well. Then there's the US military and economic influence. The dollar isn't backed by gold, but it is backed by the fact that the US has the biggest economy and the most powerful military on Earth. When countries hold dollars, they're not just betting on an economy. They're betting on America's ability to enforce financial stability. Bitcoin, on the other hand, doesn't have an army. It doesn't have trade deals. It doesn't have a central authority making sure people actually use it. It's the Wild West, and governments don't like systems they can't control. And let's not forget regulation. Bitcoin exists because it's decentralized, but that's also its biggest vulnerability. The US government can't ban Bitcoin outright. It's too global for that, but it can make it very difficult to use. Strict regulations, high taxes on crypto transactions, pressure on banks to avoid dealing with it. Governments have a lot of tools to keep Bitcoin from becoming a real challenger to the dollar. So yeah, Bitcoin is cool. It's revolutionary. It's a financial experiment playing out in real time. But the US dollar? It's a system backed by policies, laws, global trade, and, well, a whole lot of influence. For Bitcoin to truly replace it, it's not enough to just exist. It would have to convince the world to rewrite the rules of money itself. And that's not happening overnight. So, let's say you're a full-blown Bitcoin believer. You think crypto is the future, the dollar is doomed, and one day, we'll all be paying for coffee and sats instead of cents. Okay, but how does that actually happen? For Bitcoin to replace the US dollar, a few very big things need to change. First, it needs price stability. No one's switching to Bitcoin if their paycheck can drop 30% in a week. The only reason people trust the dollar, even though the government prints more of it every year, is because it doesn't lose value overnight. Bitcoin, on the other hand, swings wildly based on speculation, hype, and Elon Musk tweets. Until Bitcoin can stabilize, it won't be a realistic replacement for everyday spending. Second, it has to scale. Right now, Bitcoin processes about 7 transactions per second. 7, that's cute, but Visa can handle thousands per second without breaking a sweat. If Bitcoin ever hopes to replace the dollar, it needs to scale to handle millions of transactions seamlessly. And sure, the Lightning Network exists to speed things up, but it's still a work in progress and not widely adopted. Until Bitcoin can process payments as smoothly as swiping a credit card, mass adoption isn't happening. Third, people actually have to use it. Right now, Bitcoin is mostly an investment asset. People don't spend Bitcoin. They hold it, hoping it'll go up in value. That's not how a currency works. A real currency circulates. People earn it, spend it, save it, and repeat. But Bitcoin has a branding problem. It's seen as digital gold, not digital cash. If people believe it's always going up in value, why would they ever spend it? Until that mindset shifts, Bitcoin won't function like a real currency. Then there's regulation. If Bitcoin ever got big enough to seriously challenge the US dollar, do you really think the government would just let it happen? The US already regulates crypto exchanges, taxes Bitcoin transactions, and pressures banks to keep their distance. If Bitcoin ever became a real threat to the financial system, expect governments to fight back hard. They could restrict its use, heavily tax it, or make it nearly impossible for businesses to accept. Remember, the government doesn't need to ban Bitcoin. Just making it annoying to use would be enough to slow it down. And finally, there's the human factor. People are creatures of habit. Most people don't want to learn a new financial system, memorize 12-word seed phrases, and stress about accidentally sending money to the wrong address and losing it forever. The dollar works because it's easy. Until Bitcoin can match that level of simplicity, it's going to remain a niche asset rather than a global currency. Alright, so we've talked about all the reasons why Bitcoin isn't replacing the dollar anytime soon. But Bitcoin supporters, they've got plenty of counter-arguments. And to be fair, they're not just a bunch of tech nerds with laser eyes on Twitter. Some of them are serious economists, hedge fund managers, and even politicians. So what do they say? First, let's tackle the volatility issue. Yes, Bitcoin's price swings are insane, but supporters argue that's just because it's still early. Every new technology goes through a volatile price discovery phase before stabilizing. Look at the early days of the stock market. It was chaotic too. Bitcoiners believe that as adoption increases, more liquidity will smooth out the wild price swings. Plus, they argue that traditional fiat currencies aren't exactly stable either. Just ask anyone who lived through hyperinflation in Argentina or Venezuela. From their perspective, Bitcoin might be volatile now, but compared to some national currencies, it's actually more reliable. Then there's the scalability problem. 7 transactions per second? Yeah, that's laughably low. But Bitcoin supporters argue that's like saying the internet can't work. In the 1990s, because dial-up was too slow, they point to second-layer solutions like the Lightning Network, which allows near-instant, low-fee Bitcoin transactions. The idea is that Bitcoin itself doesn't need to handle every single transaction, just like the internet doesn't route every email through a single server. If Lightning Network adoption grows, Bitcoin could, in theory, scale to millions of transactions per second. Next up, adoption and spending. Critics say people don't actually spend Bitcoin, but Bitcoiners argue that this is just a function of current government policies. Right now, Bitcoin is taxed as property in the United States, meaning every time you spend it, you owe capital gains tax. Imagine if every time you swiped your debit card, you had to do a tax calculation. Yeah, no thanks. But if regulations change to treat Bitcoin more like currency, they argue, spending would take off. And besides, there are places where Bitcoin is being used in everyday transactions, like El Salvador, where it's legal tender, and some parts of Africa, where it's a hedge against corrupt banking systems. And what about government resistance? Here's where Bitcoiners get philosophical. They argue that governments can't truly ban Bitcoin. They can regulate it, they can make it harder to use, but they can't shut it down. Why? Because Bitcoin isn't controlled by any company, server, or central authority. It's a decentralized network running on thousands of computers worldwide. The only way to kill Bitcoin would be to shut down the entire internet. And even then, people could still trade it offline using paper wallets and mesh networks. The idea is that, over time, as more people use Bitcoin, governments will have to accept it rather than fight it. Finally, the human behavior argument. Critics say people won't switch to Bitcoin because it's too complicated. Bitcoiners argue that's temporary. Remember when sending an email seemed complicated? Or when people thought no one would ever shop online because it wasn't safe? Technology improves, interfaces get easier, and people adapt. Bitcoiners believe that as wallets, payment systems, and infrastructure improve, using Bitcoin will eventually be as easy as using a credit card. So, who's right? The critics or the Bitcoin believers? Honestly, it's too early to say. Bitcoin has some massive hurdles to overcome, but history has shown that revolutionary technologies often seem impossible until they're not. So far, we've been talking about Bitcoin like it's the only alternative to the dollar. But here's the thing. Bitcoin is just one piece of the crypto puzzle, and depending on who you ask, it might not even be the best one. Enter Ethereum, the second biggest cryptocurrency, and, according to its fans, the real future of finance. Unlike Bitcoin, which was designed to be digital gold, Ethereum is more like a decentralized global computer. It doesn't just store value, it runs smart contracts, self-executing agreements that cut out the need for banks, lawyers, or middlemen altogether. Want to take out a loan? Swap currencies? Even buy a house? With Ethereum, you could do it all digitally without ever stepping foot inside a bank. And Ethereum isn't alone. There are thousands of cryptocurrencies out there, all claiming to fix Bitcoin's flaws. Some are focused on speed, like Solana, which can handle over 60,000 transactions per second compared to Bitcoin's 7. Others focus on privacy, like Monero, which hides transaction details so well that governments really don't like it. And then there are stablecoins, cryptos pegged to the value of a fiat currency, like the US dollar, designed to provide stability while still existing outside the traditional banking system. Supporters of these alternative cryptos argue that Bitcoin is too rigid to become the future of money. It's slow, expensive to use, and resistant to major upgrades. Meanwhile, Ethereum and others are constantly evolving, introducing new technology to make transactions faster, cheaper, and more user-friendly. Bitcoin might have the first mover advantage, but in the world of tech, first place doesn't always win. Just ask MySpace. But here's the problem. Competition is messy. With so many cryptos trying to be the future of money, it's hard to know which one, if any, will actually succeed. Bitcoin is still the most trusted, but Ethereum has more use cases. Stablecoins are more practical, but they rely on centralized entities that can be regulated or shut down. And then there's the biggest wild card of all. What if the real future of money isn't crypto at all, but something else entirely? So after all this, the big question remains: does Bitcoin, or any crypto for that matter, actually replace the US dollar, or do they just learn to live together? Bitcoin believers say the dollar is a ticking time bomb. Governments keep printing more money. Inflation eats away at people's savings, and global trust in fiat currencies is fading. In their view, Bitcoin is the logical escape, an asset that can't be manipulated, inflated, or shut down. They imagine a future where people don't just use Bitcoin, but actually leave government-controlled money behind entirely. No more central banks, no more economic manipulation, just a financial system that runs on hard-coded rules. Sounds radical? It is. And that's exactly why many experts think full replacement is unlikely. Here's why. First, governments won't just give up their control over money. The dollar isn't just currency, it's a tool for power, influence, and economic policy. If Bitcoin ever got close to replacing it, expect governments to push back hard with strict regulations, high taxation, or even outright bans on its use in official transactions. Second, stability matters. The global economy depends on a reliable, predictable money system. Businesses, banks, and even governments need to operate with certainty, and right now, Bitcoin is just too volatile to play that role. Unless that changes, the idea of Bitcoin replacing the dollar at scale is more fantasy than reality. But here's where things get interesting. Bitcoin doesn't need to replace the dollar to succeed. It could coexist as a parallel system, an alternative for those who don't trust governments or want to opt out of inflation. And in some ways, that's already happening. Countries with failing currencies, like Venezuela and Turkey, are seeing more people turn to Bitcoin as a way to store value. Even in the US, Bitcoin is being used as digital gold, a hedge against uncertainty, not a replacement for everyday transactions. And then, there's the wildcard government-backed digital currencies, aka central bank digital currencies, CBDCs. Instead of letting Bitcoin take over, governments could roll out their own digital money, fully centralized, fully regulated, and fully trackable. China's already doing it with the digital yuan, and the US is exploring the idea. If that happens, Bitcoin won't be replacing the dollar. It'll be competing against a digital version of it. So, will Bitcoin replace the dollar? Maybe one day, maybe never. But the bigger question isn't just about Bitcoin, it's about the future of money itself. And if history has taught us anything, it's that money always evolves. The only question is, who gets to decide where it goes next? So, what do you think? Is Bitcoin the future of money, or will the dollar always reign supreme? Let us know in the comments. And if you want to understand more about how money really works, including the best ways to earn sign-up bonuses for crypto exchanges or checking and savings accounts, Check out Money, smylife.com for all the latest tips. Oh, and before you go, hit that like button, subscribe, and turn on notifications so you never miss our breakdowns of the biggest economic stories. See you in the next one.